Against Tax Solutions podcast. As always, we believe not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit highly appreciated assets, tax deferred, so you can create, preserve, and grow your wealth. I'm your co-host, Pierre York, filling in for Brett Swarts, and each episode, I'm joined by some of the best wealth, business, leadership, and real estate individuals in the world to share ideas, deal stories, and inspiration. So together, we can make complex tax deferral strategies simple and passive income plans achievable. We're streaming on the Expert CRE Secrets podcast, the Capital Gains Tax Solutions YouTube channel, Living in Newport Beach YouTube channel. So hit the like button, subscribe button, and notification bell if you like what we got going on here. Today, I'm super excited about our guest. He started off in corporate America, got out of it with the love of real estate, and is now running and operating a multifamily fund, doing operations, ground up development, GPs and LPs. So we're going to learn a lot to him. We're going to talk about the market. We're going to talk about some tax strategies. We're going to talk about what they're doing right now to hedge. So please welcome Paul Thompson. How you doing, bro?
Doing great. Thanks for having me. Looking to having a conversation here.
Yeah, absolutely. So Paul, quick 1 minute background on yourself for the audience.
Recovering corporate America drone turned full-time real estate investor is probably the best way I can put it in the least amount of words. Used real estate my day, and from there I have just continued to kind of up the ante and go deeper down the rabbit hole, so to speak. I started with multifamily, then I started doing some syndications, doing ground up construction in the Dallas-Fort Worth area.
Right on. Did you chat GPT that?
That answer? Yeah. I when you popped it out there, I just wrote it out real quick and just read it off my script here.
That thing's crazy powerful, man. I've been using it a lot lately. And have you guys been implementing that in your business at all?
Yeah, I use it for creating copy, a blog, or I have a podcast as well where I'm monologuing, and so I'll write scripts, video scripts, and I'll write articles where I'll ask it some questions, and then it'll spit out, a probably 80% good enough answer, but it just sounds a little bit robotic and it has no personalized stories. And then I interweave my my actual voice into it. So basically, it removes the blank page syndrome where you just have something to edit. That's much easier than trying to come up with something from scratch yourself.
So you're using it for more content development as opposed to trying to ask it crazy questions about the future and all that kind of stuff.
Yeah, the answers it gives for those crazy future answers can be very entertaining. But you never know when it's wrong. Like it
right.
The gaps with it, right, is we've done some things and just so convincingly told me something that I knew was wrong. So when then I don't know which way to go with it.
Yeah, it's crazy. I was watching a kid who asked it to find the next top 30 cryptos that are going to 100x, and it came out with like a list. And I mean, it went through and it read white papers and like, kind of matched them with like what's doing well and what's not. And like it ran a whole analysis that probably take that kid probably 2 weeks to pump out.
Right.
And it did it in maybe 35 seconds. And just it's crazy that it's going there, but he didn't agree with literally any of them, I think, but 2.
Right.
Out of 12. So maybe it knows something he doesn't. We'll have to wait and see. But I think it's interesting, and I think it's a good kind of segue into my first I guess legit question for you. Kind of just threw that one off the top. But
sure.
With the debt ceiling that just got raised, right? Interest rates, this environment. What are you guys doing to hedge against what's either coming down the pipe, or you guys licking your chops for opportunities? Tell us what One Call Capital is doing over there.
We're still looking for opportunities. You just have to be a lot more careful. It's hard to find deep discounted scenarios because there are so many who the people who sell probably are being underwater or are in really bad shape, and you don't really want to take on somebody else's problem. So what we're trying to do is we're structuring a lot more owner financing scenarios. I think this is the market for using owner financing as a way to create a little debt structures and basically help build your capital stack versus getting what would be the market rate now would be something maybe even 10%.
So why would someone want to come in and do owner financing for you guys?
It's funny when people ask about why in the world would anyone refinancing. As a buyer, I think it's pretty intuitive because you can get terms that you can control that maybe the banks would not offer you. So I think that's a pretty compelling reason. But why would the seller financing? Well, there's also a tax advantage to that, and you guys can probably speak to it way better than I could. But you delay your taxes. You still have to recapture depreciation, but you can also move your basically delay your as you receive payments instead of doing it all in 1 year. If you're selling an apartment complex and you sell the entire thing and you've had it for a while, your tax burden is going to be significant. So unless you have a specific strategy for that, which I'm sure you guys could help them with, then owner might be a good option for them to. You still don't pay taxes; you're just going to pay it over a distributed amount versus basically an installment sale versus doing all at once.
Sure. I mean, so then like playing devil's advocate to that point, like why wouldn't someone just do a 1031 exchange?
Right. Depending on their stage of life, not everybody wants to go back. So a lot of times people who own apartments, they are renting them themselves and their stage of life has gotten to where they just don't want to be in charge of owning property anymore. And they really just want the kind of the cash from it, but they don't want X from it. And unless you're going to exchange to something like kind, they may just need the money to retire off of. And so you can say, well, you just kind of structure it. So, well, how much money do you need up front to make sure I have skin in the game and to pay your taxes this year, but then spread those payments over time, basically create an annuity out of your apartment complex that you don't have to deal with.
Yeah, no, definitely. And I think that you touched on it. That's one of the biggest kind of challenges with the 1031 is people, have to go back into something. And if it's a lot of work managing an
Yeah.
apartment complex,
Yeah.
like I don't know how many people understand how much work it is.
Yeah. Good management in place. You're still having to manage the manager, right?
Yeah. Yeah, definitely. Is One Call Capital totally vertically integrated?
Yeah, so we our own operators, and we have our our construction team, and we kind of have the whole suite there that we can. I mean, we hire engineer contractors, but we have all the teams in place that we need to start the project end to end.
Sure. So sounds like just in kind of summation of everything that we just kind of went over. Sounds like right now you're using ChatGPT pretty regularly. No, I'm just kidding. But you're basically based upon where the market's at and stuff like that. You're being really conservative with your underwriting, right? You're going after the seller financing deals, and you're really trying to work with the seller directly to give them what they need in order to kind of get to the next step, right? And then create a cash flow situation for them without them having to do a bunch of the legwork anymore and kind of get them out to retire. A lot of people find that attractive because they don't want to do a 1031 because let's face it, they don't make any sense right now, right? And you're just trading more problems for more problems. And so that's tough. But with the seller financing, it's a good way to delay some of the tax and defer some of it, as well as get them what they need now, and then they still can cash flow off of it without having to go back, and they're still backed by real estate. So that becomes an attractive opportunity for some people who are really trying to just kind of get out. What do you think is the number one secret to being successful in this market?
The thing successful in this market is same in any is that you follow your fundamentals and you buy right. Like that's it's really hard to overcome for more than what an asset is worth. I really believe we should be looking for assets at a discount, 10% off kind of discounts. But I'm talking about the way you create real wealth in what the way you generate value is by you find something that needs to be, and you can force the appreciation by better management, doing the rehab, and people haven't bothered to do, and just having a good management and business practices. A lot of value is created by that, especially in the multifamily market, where there are a lot of boomers right now that have houses and real estate holdings that they are retiring out, they're passing away. These transactions or these assets are then being passed down to the next generation that don't want them or don't know how to handle them.
Yeah. No, absolutely. So, I mean, it's no secret, right? A lot of people are kind of caught on to this idea that, the COVID landscape, right, created all of this buying frenzy, right, with such low debt and interest rates.
Yep.
People were just throwing anything at the wall, and everything was, hitting bullseyes.
Yep.
Until this 2020, late 21, right, 22 market came, and now, people put on this floating debt, this bridge stuff in order to basically trying to do what you're saying, force the appreciation
Yep.
and get everything going. And their plan was to either refi out of it or, sell at, an even more compressed cap than it already has been. And that plan hasn't really worked out, to say the least, right? Rates adjusted, bridge debts are, ballooning, and they're being called due, and all these kind of situations that are going on with the financing and the capital stack part of the equation. How did you guys either A, right, avoid that altogether, or B, if you got caught in that, what are you doing to kind of mitigate those damages right now?
So far, fortunately, we haven't caught by anything. So when we did our underwriting on the front end, we were conservative. We didn't count on there being the perpetually free money or perpetually low interest rate money. I kind of had the feeling that it'll back up. I didn't know it'd be now. But I don't like looking at a pro forma and not running any kind of variables into it that don't stress what could go wrong, because there's wrong in any sort of rental property. There's headaches, and sometimes it's an external force like a pandemic that you never could have anticipated. But that's why one of the reasons very big on multifamily is because the fundamentals of why multifamily works hasn't changed. Our population is growing. People need a place. There's a shortage of affordable housing, and more and more people off when they are buying property, buying their single family residence. So people are renting for longer. And fundamentals, I don't see any of dynamics in the greater macroeconomic and sort of change those fronts. And a lot of people are moving to the Sun Belt and Texas specifically, and trends. I don't try and create the trend. I like to identify the trends and follow them. And so that's kind of the approach that we've taken.
Sure. So really, you guys stressed your pro formas conservatively in the beginning, right? When everything. Yeah. So you had some wisdom behind you. Now, was this something that you had kind of like mentors or other people that have been through kind of, the cycles that were speaking life into this, or how did that come around?
Well, there's safety in the multitude of counselors, and anytime you do analysis, there's fundamentally assumptions built into it. I have an engineering science, and I'm just really big on kind of running the scientific method, and it's the best things that we've discovered as for humanity, and it applies to what we're doing. Every thing I'm doing experiment, and I try and I have this kind of concept that insight invites investigation, but then data drives decisions. I have this idea like we might be able to do this kind of strategy. We might be able to development. We'll do that in the path of progress. We have our assumptions written down, and let's go see what and as much data as we can find from sources that either confirms our hypothesis, helps be confident in kind of the bet.
Gotcha. Are you guys Are you guys looking to exit these assets? Has your strategy changed at all since kind of the shift?
Good question. So far, our strategy hasn't changed. Really like to hold. I'm not a upper, so to speak, but a lot of times the way you raise capital in the multifamily is there's this underlying assumption that you're going to pay off the investors sooner or later. And so when you have that in mind, you have like a 5-year hold, kind of minimum 5-year hold built into it. If the market works for you, you can do it 3 years, great. If you can hold it for years, and that's what you need to, because what the market makes you do, that's fine too. But he's trying to set up a scenario where there's sufficient cash flow that if we choose to recapitalize and buy out our LPs, then we have the option to, because that gives you options. And I always like to have kind of multiple exit strategies or multiple exit plans when it comes to assets. I don't want to just like rely on one approach.
Sure.
If we can't do it in 5 years, everybody's messed up. That's not the way I want to approach it at all.
Yeah, no, and that makes a lot of sense. And to that point, right? Like, if you, all right, hey, it makes sense to liquidate, right? Sounds like you guys are liquidating.
Yeah.
With that plan, how are you guys handling the tax implications? I mean, you guys are seriously adding value to these apartments, and inevitably there's going to be a high capital gains,
Yeah. So far,
tax.
we haven't sold, so we've kept our assets. Like we are long-term buy and hold buyers, but we do have a ground-up development working on that. We're doing we're doing multifamily on one side, and then on another parcel, we're doing the zoning we're able to get there was for and do and build to rent type model, still, but just different type of product. And so we will almost certainly sell those instead of build those. We like to do best, which is multifamily. And then so when you're doing ground up development, which is a newer thing, for you have to keep a little more available to you, and so we'll likely turn those assets a little more quickly than we would with a traditional multifamily value add.
So in that situation, right, what's the tax plan there?
Tax play for those, you could do a 1031 if it made sense, depending on how much capital we make. And you may kill over when I say this, but sometimes it's just okay to pay the taxes. There are worse things. I like to have intentionally don't live in Puerto Rico, even though I could save a ton of taxes by doing so, because I'd rather have the option to live where I want to live and kind of design my life around other priorities. The tail is not wagging the dog. Puerto Rico, even though I have there if I did, tax wise
Yeah,
anyway.
sure.
And sometimes I pay the taxes, and I take every mechanism I can. I carry forward losses from other projects, and net, I'm less than effective at tax rates at less than 10% most years. So that's okay by me. Like a percent or usually 12 or less, I'm considered optimized enough to be able to move forward in life.
Yeah, and I think something you said there is really wise. Sometimes it's okay to pay the tax, and I mean, like our whole company, right? Capital Gains Tax Solutions is exists to provide freedom and flexibility, right, and provide options for you, right? We're solutions with a plural.
Yeah.
And sometimes honestly the solution is to pay the tax, because we've seen it in situations where it doesn't make sense to do a deferred sales trust, right? Their risk tolerance doesn't allow for them to to warrant a deferred sales trust. They don't
Right.
want to put the money into another piece of real estate, right? Their goal is to go and travel, and they don't want to deal with anything, and their gain is, maybe significant, but at the same time, right, they have a carried forward loss, and their tax rate is marginal, right? And at some point it's like, okay, look, like there's not enough pain here for you to warrant one of these. Like, go pay your tax, go have fun, go live your life. Like
Yeah.
that's what it is, and not letting the investment dog get wagged by the tax tail, right? For
Right.
what you said is super key, right? And in our opinion, right, one of the big downfalls to, having to use a 1031 is that time crunch.
Yeah, it's
And
nerve-wracking. Yeah.
especially coming up now, right? And that when you sell, you got 45 days to identify a new property and you got 180 to close. Well, in a market, like, typically, unless you find a killer deal, which if you do, great, use a 1031. It makes all sense in the world.
Right.
But
Right.
if you're like, oh, okay, I gotta go find something now. Aside from, a single tenant, retail, right? Like an anchor tenant, a Dollar General or something, right? Throwing off an 8 cap, in the Midwest somewhere that you've never, and, or some other, kind of like long-term, low maintenance, which could be a great strategy as well, right? Not saying that's
Right.
not a good one, but having to go out and find something, especially apartments, in 45 days is tough. How many deals
It
do
would
you
be
guys
very
underwrite? Yeah,
right.
it
Quite a
doesn't.
few, like 10 to 1 every
Yeah,
10 we see, we turn down 9. Yeah. And
right.
those times will never go by so fast when you have just sold your property, find your next option, and then you're trying to actually close on one of the 3 on your list.
Yeah,
Sometimes can make you make bad because you're trying to optimize for a small percentage.
yeah, and I think that, like, goes to the whole point, right? Like, when you're in that position, that makes you a motivated buyer, and that is not a place you want to be. That's back
Yeah.
into a corner. You got one way to go, right? And it's to buy this, and they can take advantage of that situation, right? And I've seen it happen. Sellers are like, "No, I know this 1031's coming up. I'm not budging," and it's like, hey, what are you gonna do, right? Like, your tax thing is so big, and that's why that's why we have such a passion for telling people about the deferred sales trust, because there's no time constraints. There's no time constraints, and you can sell a piece of real estate. You can break up your syndication if you wanted to, and you could, some of the partners could go into treasury bills and just chill and wait, or stocks, or they got a business venture they want to do, right? And grandma doesn't have to. Grandma can take all of her money right now, and it's not going to affect you, or right? Everyone's tired of Billy. Billy's entitled, right? And so Billy's out, and it's not going to blow up the whole deal. So it gives you flexibility. It gives you options, right? Sorry to all the Billies out there. I don't know.
Yeah, those poor Billies.
Billy's not actually a really cool dude. But that's kind of just the crux of it. So what we provide is that opportunity to sell, defer the tax, get liquid, pay off all debt, and then invest the funds. And then when it makes sense, when the time's right, when you find the right deal, then you can go back into real estate. And on top of that, you get a brand new depreciation schedule. So,
so you reset the depreciation with a deferred sales
you can
trust?
reset the depreciation with the deferred sales trust.
Compelling. Yeah.
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 So
is there any reason why you would deferred sales trust versus a 1031?
If the deal's too small, so you don't have enough pain, kind of like we talked about. If you don't want to reinvest the funds, like if you just want to go travel, or you want to buy like a primary home and we can't work with it, then that might be a reason. Or if you're just like gung ho on like a $3 million Ferrari, which has happened, right? Those are some reasons why you wouldn't want to do a deferred sales trust. The other reason is you find a really good 1031 that makes sense, and you go into it. And but what's cool is you can use us as a backup plan.
It's a natural fit.
Yeah.
Gotcha.
Yeah. And they actually find something. So it's a backup plan too, right? So for failed 1031, so you don't have to be in that position of like, your exchange is coming up. At that point, you'd be like, don't worry about it. Like, I'm not gonna cave to your demands, because you got backup that can save your failed 1031, and you're like chilling.
Yeah, that makes
good. So that's that. You guys can learn more about the Deferred Sales Trust by going to capitalgainstaxsolutions.com. We have a mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. So you can definitely come and check that out, ask questions, get to know us, and all that kind of stuff. So right on. What are you guys looking to do in these next, years to come?
We're in a bit of a transition where we've gone from a one asset play, doing kind of value adds. I'll still do that, and I still now as a fund where I find the operator and I do the capital raise. So I enjoy the capital
Mhm.
raise side of the business more than the actual operations of turning a property around, really. But what we're learning is how to create value with ground up construction, which it's funny, it's even more work than doing a value add, but it's something I'm relatively new at. And it's just, it's fascinating to go through the entitlement process
Yeah.
to design the product that is needed in today's market versus what was decided in the 70s or 80s or 90s. I find that interesting because the way we live and work is completely changed in the last generation.
Totally.
I mean, it's changed in the last 5 years. Good heavens!
I was gonna
And
say it's
so,
like the last like 3 years it's
yeah,
changed.
we're actually promoting an interesting project where I'm not the operator for, but I'm co-GP. Trying to raise some money. It's this idea of commercial condos, they call it, where it's like a live work
Mhm.
environment where it's kind of like a little community where it's, I mean, because we've the kinds of apartments that we need to accommodate basically us these days. And so these condos have areas to go and work, but then they have the recreation built into it as well. So it's all kind of the same complex. Super cool idea. That I think is kind of the next trend in housing.
So you're basically building a bunch of Google headquarters.
Yeah, that you can live in,
Yeah.
like little small versions of Google headquarters
Little
where
mini
a
Google
bunch of
headquarters.
tech bros can run businesses from a remote. And that's what the
Yeah.
way the world works now. Is like I think this idea of working for a company is an outmoded, like in the next 20, 30 years, we're going to shift more to being this even more of a gig type of economy where we just sign up for projects versus I'm going to work for Google and I'm going to do that for the next 20 years or 7 years or however long it
Yeah.
is.
Yeah, it's gonna be real interesting. And I didn't plan this, but I'm gonna bring this around full circle, right?
Okay.
The whole like advent of Chat GPT over here,
Yeah.
right? Like, you building these live work, areas, right?
Mhm.
And you just got this dude on a skateboard just skating through the halls, right? All of a sudden plops down and prompts Chat GPT to make something and like sends it over that he knows how to do something, say it a certain way, right? That
Sure.
someone else doesn't, and makes it super valuable. And boom, it's created, right? And so it's going to be interesting to see where these people go. What I can, definitely probably guarantee is that artificial intelligence is never going to take away the need for people to have like a place to live. So
That's a good point.
it's a fundamental need, right? So if you're looking to invest in something, housing is never going away,
Yeah, and
right?
I was thinking about this, like who doesn't actually need housing? Like who doesn't need land? Even if you're leasing it, who doesn't need land? And the only people I figured out that actually don't need it are unless you are like perpetually on a boat sailing the world, or you live on the International Space Station.
I was gonna say,
Otherwise,
yeah, unless you're Elon Musk.
yeah.
And
Otherwise, yeah,
he
he just couch surfs, right?
yeah,
Yeah, and I think that kind of behavior, that more transient nomadic lifestyle is happening, but you're still using land. You're still using Airbnb to
sure.
to rent something, right? So there's the need to lay your head someplace at night isn't going to change anytime soon for the human
No.
race, unless there's some really interesting developments happening in AI that I'm not foreseeing.
Yeah, I don't know how it's gonna turn it into shelter, right? Like, I mean, food, water, air, shelter, sex are like the five fundamental Maslow's basic
Mhm.
needs, right? Like, if you
Yeah.
don't have those, like that's all you can think about.
You,
So
you know what's crazy is when I first heard about this whole development, I wondered, it's like, what are we going to do? Like, are we going to need some sort of a replacement for work? And the more I thought about it, the more I'm convinced that not many jobs will be replaced. Now, there'll be jobs that will be changed dramatically, but the
sure,
need for humans to do something, I don't think goes away. And in fact, even if we could automate every mechanical thought process that's out there, humans still need human connection. And so, I mean, think about how, if you could create a society like 5-to-1 student to teacher ratio. So like more and more people would become teachers, more and more people would become therapists, more and more people would deal with what other humans need versus just having to run crunch numbers or how to build something, right?
Yeah, the task will definitely change, right? It's an interesting kind of thought process, and at the end of the day, like, maybe, who knows, maybe they'll just create an entire robot society that can be all, communist and create everything that we need, and we don't have to do anything anymore, right?
Yeah,
So
it's like Star
there's
Wars.
that world too.
Yeah.
So who knows?
Yeah.
It's crazy to think about what's, kind of coming down the pipe here. One Call Capital, you guys are a fund, right?
Mhm.
Are you strictly investing in multifamily real estate development, or tell us a little bit about your fund before we wrap
It's
up here?
it's multifamily. So we do partner with other operators, help raise capital. We have the option to invest directly into our own deals with the fund if you wish. So it's basically the only limitation that we have from our PPM perspective is it has to be set. But otherwise, we have a couple different products where we actually lend to land flippers. I'm basically going down the land path. Like I've just doubled down on. I believe that land is the
Cool.
play, and I don't want to be a land flipper myself, but I see the value of it and I see the upside of the business cycle. And there are a lot of people doing it now, and so I'm plugged into those markets, and basically we lend to that keeps our money turning, and then we carefully select a multifamily project that makes sense for either a value add or a ground up development.
Yeah, no, that's awesome. So do you have multiple funds within One Call Capital?
No, it's just one fund, but you might consider it a fund of fund.
Oh, fund
We
to
have
fund.
the option, right?
Gotcha.
But we have it's a blind fund, meaning that investors have to be accredited, but investors invest into it, and then we make the allocations.
So you guys are basically giving what, can you just dive into like just some basic rough returns on your fund?
Yeah, so we have a 12% pref, so we are obligated to pay the LPs first up to 12%, and then we split the upside 50-50. And since we're a relatively new fund, we don't charge any management fees. So basically, we don't get paid unless we make the pref for the LPs.
Gotcha. Do you guys have like any sort of like PGs on those or anything like that, or?
Mm-hmm. Yeah. So we partners that we work with. So we have certain type of investors that come in, and they'll say like, I'm interested in partnering with you guys. Like more than just being an LP, and we'll entertain those conversations. Yeah.
Cool. Awesome. All right, cool. So if you guys want to get in touch with Paul, check out his fund, pauldavidthompson.com.
That's right. Thanks for having.
That's where they should go. You're probably on LinkedIn too, if you want to connect with them.
LinkedIn.
Sure.
Yeah. All the places.
All the interwebs.
Thompson. Yeah.
You got to type in those 3 common names in a row.
Those 3, the curse of the common name.
Right orders, right? And it'll pop up, and we'll be good to go. Okay, cool. If you guys want to learn more about the Deferred Sales Trust, go to capitalgainstaxsolutions.com. Come to the mastermind. Come learn how you can literally defer all your tax and go into Paul's fund and earn 12% pref on your money while you're waiting for a real estate deal.
There you go.
And then when you find it, you can go into it. So amazing strategy, amazing opportunity. Paul, it was super awesome to have you on, man. Last piece of advice. What's the best piece of advice you've ever received?
So I spent 15 years waiting and hoping and dreaming that I would become wealthy. And I worked for a job and realized one day that I was never going to become really wealthy, certainly not create generational wealth unless I did something on my own. And I built equity somehow. I had to either buy equity, I had to build equity, or I had to create equity. And I think that is the biggest lesson that took me way too long to figure out, that I hope all of you will figure out as well, is we get in this trap of exchanging our time for money, and we forget to exchange our money for time, because we don't actually want the money. We just want the options that money gives us. And the way you do that is by buying equity.
Yeah, absolutely. That's awesome. I appreciate it. Well, thanks again for coming on, man. And thanks again for everyone listening to another episode of the Capital Gains Tax Solutions podcast. As always, it's not having a clear plan that's the enemy, and using a proven tax deferral strategy, using proven equity building fund models, right? Aligning yourself with people like Paul and us at Capital Gains Tax Solutions is the best way to create, preserve, and grow your wealth. So thanks again for listening. Hit the like button, subscribe button, notification bell, guys. Make sure you go check out pauldavidthompson.com. Check out One Call Capital. Check out our Capital Gains Tax Solutions YouTube channel, as well as the mastermind group every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Thanks, everybody. We'll see you on the next one.